All right, guys, welcome back to the channel. So today we're going to talk about Google. As you can see, Google has been on a tear lately. We have the 3-month up right now on the 2-hour time frame. Google is trading in this range and has now broken out where it went from 139 all the way up to 150. Now it's clear just looking at the trend here that we have resistance at 154.20. So that is a potential retest this week of Google. But think about your risk to reward right here. If you're going long on Google at these highs at 151, you really only have a 2% risk right there. I mean, 2% gain, but your risk is all the way back down to the support level of about 143, 144. So you're risking trying to make 2% off of 5% loss. Just be very careful. Google is very bullish right now. It broke out of this trend, which is excellent, but you just have to be aware of the actual levels. The first level that I'd be looking to trade, if I was going to be trying to, and following a strict stop loss, is you're going to have to see if it holds the 150. If Google's going to hold 150, then it's going to make that move back up to 154. But if it rejects here at 150, cannot hold, I'm looking for a move back into 147.5 to 146. In this range, looking to make a move, but just be aware of your risk versus reward. So it's got to hold that 150 level, prove itself, and then it's going to make that move to 154. Because when you look at Google on the long-term charts, it is breaking out, which is excellent. But any day trader knows that this is a clear red light, that they're going to be trying to take profits at this 153 to 154 range. So just be aware of that. All right, so let's talk about Tesla real quick. 6-month channel, you can see that Tesla is on a downturn right now. But the real question is it double bottoming here? You have this low at 152.37. where it held this low here at 160. So the real question is this actually going to be the turnaround now? So the only way to really answer that question is we have earnings coming up April 17th. It's coming up in less than 4 weeks. This is a potential long play if you want to. Now, obviously, make your own investments with your own risk. Let's talk about the levels first, then let's go into the trade idea. So Tesla, clear resistance, 180. Clear as day, right here. There's resistance. It is failing to overcome this, but with a catalyst like earnings, it could easily break through 180. And especially with a catalyst on April 17th, it could easily break through 160. So if you're thinking about taking a position, nothing wrong with that. But I just want you to be aware that you have this clear zone that it's trading in that it cannot break out of. And I think what it's going to take is earnings to make the difference here. So as you can see here, we're trading from 160 to 180 in this range right now, and this is where we're at. The trade idea that could be potential would be to try to buy as low as you possibly can with your stop below 160.5. So let's say you take the trade, even if you just took it here at 170, and you're risking 5%, 5 to 6%, but your goal is to break through 180. That's an even 1-to-1 R right there. But the next thing you got to watch is earnings going to be good for Tesla? The numbers have been down, the margins, interest rates, etc. But overall, year to date, they are down over 30%. I was looking at Tesla the other day, and it was just surprising to see from 250 all the way down to 160, 35%. Currently, with them at 170, it's like 32 to 33%, which you can see on the top left of the screen. So it's not a bad place if you believe in Tesla long term. It's not a place to dollar cost average. I mean, 414 all the way down to 170, you are literally down 60%. So, maybe I'll start thinking about picking up shares long term. Who knows? But you really got to believe in the Elon, the Tesla, the AI robots. But short term levels, obviously, 165. That's where we're looking to make our entry. Scalp entries with the resistance up at 180, really 179. So definitely just be aware of that. I definitely just give it some time. You can see where Tesla's going to go. And it might move just because of pre-earnings 3 to 4 weeks prior. All right, so next is Tlry. I made a video on this about a week ago, and it was actually a nice call out. We called it out around 1.8, and it's made a 30% move since then. So 1.8 up to 2.4. Congratulations if you took that position. That's awesome. Definitely beware that this is a clear momentum move. If Congress is actually going to loosen up on marijuana a little bit, then we could definitely get some movement here. But as you can see, it's starting to really get bullish here, but it's very extended. I mean, look at the RSI, it's at 73, 74. So don't be surprised if you get a pullback to $2 this week. I would definitely be cautious of that. But remember, penny stocks can move a lot, so definitely beware. We got that clear resistance up at 2.5. Maybe we get a retest 2.5 and then draw back. But when you're trading stocks that are this price, even if you got to 2.5 and started pulling back $2, just remember, if you pull all the way back $2, you're getting like a 20% pullback on your money. So definitely just be cautious. This is a small allocation portfolio trade. Don't overstay your welcome with these types of stocks. All right, let's talk about Nvda. For some reason, everybody loves Nvda just because it's gone to the moon. But this is a stock that I'm not really trading. I mean, you look at it, it went from 500 all the way up to 1,000. And this is basically all within the span of a month. So you definitely got to be very careful with this stock. But looking at it on the short-term time frame, on a 1-month chart, I'm going to get rid of this so it's easier for the viewers. Just clearly resistance to 974. You want to take your stabs because it's so bullish. I'd wait for like 850. It's definitely a scary move, but you have to follow stop loss with this stock because you just don't know, is it going to pull back? I mean, I'm going back on the 1-month chart and went from 770 all the way up to 1,000. For me, it costs too much money. $940. I mean, how many shares can I really buy? I need like swings to make profit on this. If you're holding this stock long term, then just set it and forget about it. Who cares? Just let it go. Let it keep going up. But for me, I mean, I see this trend line and I see it's kind of having resistance here at 1,000. I'm just going to be very careful. I would just hold my position, maybe take a few shares off. But this stock has done nothing but go to the moon, so congratulations to anybody that's holding it. So now what would be a video without Sqqq in it? This stock is the inverse relationship of QQQ, and we'll take a look at QQQ right after this. But, I started scalping this, made like $200 this week just scalping Sqqq. It's so cheap at this point that it's hard not to buy. So I'm looking at it at $10, and now it's trading at $10.30. If you're looking to trade Sqqq, you really got to pay attention to QQQ first. I brought up Sqqq so you could just see, but clearly at the $10 level, Sqqq is having resistance. So what does that mean? That means QQQ is trading around 450, and it's struggling to break this top. It tried here, now it got up to here. We have to see what it's going to do. Is it going to break through 450? You have to remember, we have earnings coming up in April for all the big cap stocks. That is a catalyst. If earnings goes well, it's going to break through this. So just because it's struggling here at 450, it doesn't mean, oh, let's just buy Sqqq at $10. Just follow a stop loss. If it breaks below it, just take your loss because Sqqq has done nothing but lose value over the last year. I mean, if you bought this anywhere, you would have had to have been the lucky guy that buys the dip at 15, sells at 16, buys the dip here at 12, sells at 14. Your luck's going to run out doing that. Now, I'm not saying it's not a bad idea. You want to hedge against the market. QQQ is very overpriced right now. I mean, look at it on the 1-year chart. I mean, it is up. Just go to 5 years. You could just see how much it's up right now from 265 up to 450. Just be very cautious if you're looking to short the market. Small allocation of your portfolio. Don't lose your shirt in this. No reason to go all in, but it's clearly had this nice trajectory. So just be very cautious, and it doesn't mean it's going to stop here. It could keep going and break up to 500. So we'll have to beware. But Sqqq, if you're looking to take that position, I mean, when you show this chart, it looks terrible, right? But at the end of the day, I mean, there's nothing wrong with trying to take a position, maybe $10.10, $10.15 in this area right here. You could see it, consolidation here. But just be wary and follow a stop loss with this because your money does decay when you buy this type of fund. All right, guys, let's talk about Apple a little bit. Apple is a stock that I truly think has more downside, and I'm going to show you why. So Apple right now is super bearish. Look at these candles on the year chart right here. It is desperately holding on to this 140, 170 range right here. It is just holding on for dear life. So I am hoping that we can get some more downside because I love Apple long term, but do I want to pay $170 a share to hold long term? Absolutely not. I want to get this around 150 to 155 would be my goal. And I'll show you why I'm thinking that just so you can see. But just in this area right here, there's consolidation right in this area and there's consolidation right here. It's clear here. It was resisting right here. It broke through, tested support, failed, test support, failed, and then it held here around the 146 to 150 range, and psychological support of 150. You're almost like never wrong going with, like, if you're going to scalp it, going with like a, a $0.50 whole dollar type thing. But I want to swing and actually take a long position at Apple at 150. I believe this company still has a ton of growth. I mean, everybody uses iPhones, their computers, everything. So for me, this is a no-brainer. And with a little bit of negative sentiment, hopefully we can get Apple to break 170 and head down to 150. And that'll give us a nice 10 to 11% pullback. And then I would feel comfortable taking that position, because when I look at long-term, this is trading at $199 a share. Trading all the way back down to 150 would be a 25% pullback. For a big cap that's worth billions, that's what I'm looking for. So am I making any short-term trades on it? Yeah, I mean, I will definitely try to trade the bounce at 170 because it's right here, it's obvious, and that's probably good for a scalp entry, but it's not good for a long entry in my opinion, because it looks like it's barely holding. I mean, you definitely have consolidation in these areas where there is support. You could see it here, you could see it here. So if you are willing to take that risk, that's fine, but just always follow your stop loss, because look, this is what it's holding on to. This is the area of support. But once 170 breaks, if it does break, this is going to go down very quickly. This is not going to be one of those like, oh, I'm going to just see if it holds, because it's been trying to hold. It's got the 168 behind it. Once this new low is broken, we're gonna head down, and it's going to be nice. And this would be a good bear entry or a short position entry. So that's what I'm looking for in Apple. I'm hoping this breaks, and then boom, we come down to 150s, and then we can start making our entry around that point. So that's what I'm looking for with Apple as a long-term entry. All right, last but not least, I just want to talk about Dwac. The only reason I talk about this is because we got the elections play. As you can see, Dwac had a high of 175, pulled all the way back. It's at $36 now, 80% drawback. If this could be influenced just by presidential elections and who gets elected. So it's not a terrible trade idea, but you got to realize you could lose your entire investment trading something like this. So definitely trade with the spare change, So if you decide to trade this stock, just realize if we break $32, we could pull back to $18. It's a 41% loss. So I don't really see much support here with that 32 and below. But if we can break $50 and hold $50, that's a nice psychological level. Then I think we can start moving to the moon. But that's obviously, we're trading at $38. We got to see. I think you're going to need some real catalysts here to get here. But if you can get $50, I wouldn't be surprised if we get to move to 60. Because it's just got to hold 50, hold that line and then start blasting up. But for now, let it just sideways trade right now. Just watch it. Don't take any positions. And let's just see where it goes, because if this has momentum, it'll start moving for you. So I think we just got to wait a little bit. It's only March. Once we get close to elections, maybe this is potentially something that we could be looking into. But I'll set my alerts for around $25 to start looking at it. But for now, I'm just going to hold the position, and that's it.